Welcome to another episode of The Path. Each session, we invite the founders of successful businesses to share their experiences and insights on what they've gone through and the changes they've made forward. This week, I'm excited to welcome Gautam Tambay, co-founder and CEO of Springboard, an extraordinary company making high-quality education accessible to everyone in the world. Gautam, welcome, and please introduce yourself.
Gup, thank you for having me, and thanks for the kind words. Hey everyone, I'm Gautam Tambay. I am co-founder and CEO of Springboard. We are an online education company. What we really do is help people land new jobs and transform into new careers in the new economy. Things like data science, design, cybersecurity, through intensive online programs that come with a job guarantee. If you don't get a job within a certain amount of time of graduation, we'll refund your entire tuition.
And these jobs, some of these companies are like Dell, Facebook, Microsoft, Apple. So what's the special sauce with Springboard?
I think some of the companies you named are big employers of Springboard grads, as are smaller startups and lots of companies that are not tech companies but still need tech talent. Everybody today, every company, regardless of the industry they are in, is hankering for high-tech digital skill talent.
So the Airbnb of brains or the Netflix of education, is that the two options that we're talking about here?
I prefer the Airbnb for your brain because it's really, I think when you say Netflix, it again, to me, that is a content library.
Yeah.
We're much more on that.
Absolutely. Look, I want to take a different tact here just quickly, which is, so, the need for human contact, even being virtual, right? And those check-ins, did that continue through the pandemic environments? Has that so what was the impact of the pandemic to your business and basically?
So the good thing for us was that our model was entirely online always, right, before the pandemic. So even all the human contact I'm talking about, it's all through video calls like this. Mm-hmm. And that was always the case. So the good thing was we didn't actually have to significantly change anything about the product or the offering. For the most part, when the pandemic hit, we did have to beef up our career services because obviously with the economy taking a tumble, at least in the early days of the pandemic, and hiring coming to a bit of a standstill in the early days, we had to make sure we are augmenting further our career to students. In terms of, so that was on the product, right? But what we saw for sure is a glut of demand. Higher education tends to be counter-cyclical. People, when there aren't jobs, people will flock to learning.
Right.
It's a good way to engage when you're between jobs. Also, the double, not double whammy, but whatever the opposite of double whammy is, like the double positive for us was that with the lockdowns in many places, people had to flock to online options. And so there was an increased demand for online everything, and including online learning, and then there was increased demand for learning, period. And so we saw a pretty significant bump through the summer in terms of demand and students coming in. And in the process, we also, we also saw there were a lot of people who were just impacted by the pandemic and the economy, and we were able to create a lot of scholarships for them. Our mentors actually contributed to those scholarships. So we felt really privileged as the pandemic first hit, to be in a place where we can really be a force of good in a time when everybody was really stressed and so many people.
That's amazing as well. It's all about people at the end of the day and the connections that they are too. Right? I'm going to take another path just on this side too, which is the funding story and the funding and the approach to funding. So when you went through your first round of funding, what was the approach? How do you sort of find investors, approach investors, and what's the story that someone's interested in at that early stage of the journey?
Yeah. There's no single right answer as to how to raise your first round of capital, and anything I share is also outdated by 7 years because that's when I raised our first round of capital, right? With that caveat, I think you really have to think about what your strengths are. And I would say, I think there's two versions of this. There is a really early pre-product, pre-anything, if you're trying to raise capital. One thing I encourage entrepreneurs to do, it really helped us in the early days, is lean on our own networks. And there's a lot of people who say don't raise money from friends and family, and it can be a double-edged sword. I believe otherwise. I think if you are privileged to have friends and family who are willing to invest, eyes wide open, right? You want to make sure they understand startup risks. You want to make sure they understand that this money may go to zero, and that's a risk that they're willing to take. And you want to make sure that your relationship is not going to be affected regardless of the outcome, right? I think those are conversations you can have. If you have that, I think early on, I encourage people to take money from friends and family, because it gives you the initial kick to just get enough traction to then go raise from seed investors or institutional firms that you don't know. And the second thing about that, at least for me, it was a big motivator and a sense of responsibility when we took capital from people we knew, because it's very personal at that point.
Yeah,
so that's very early. But then when you're raising your first seed round, which again looks very different now than it did maybe 6-7 years ago when we were at it, I would say just work at it. And the advice I have is, it's a numbers game. You've got to keep moving from person to person. Ask every single person you meet to introduce you to 2 or 3 other people. Put yourself out there. And most importantly is this advice I got, I think after I was struggling to raise one of our early rounds of capital. And it was really eye-opening for me. A fellow entrepreneur who was a couple of years ahead of us, he said to me, Gautam, it's not, because I was very frustrated. I was like, these people don't like what we do, and I'm getting rejected. How do I convince them?
Yeah.
And he said, Gautam, it's not an exercise in convincing the people who don't believe. It is a search for the believers.
Wow. Okay.
And that was just, it's so obvious in hindsight. And at the time, it was mind-blowing for me. Right? I was like, it just helped reframe what I was going through. And it was like, yeah, you don't believe, that's okay. We will make progress and come back and talk to you maybe in a year. But for now, move on and find the believers.
Yeah. That's interesting, because that also means that if you get the believers investing, it's a bit like family and friends as well, isn't it? Because they believe in what you're doing and they believe in where you're heading to. Then doesn't that also then help drive the right sort of I guess what I call positive reinforcement and positive support, just to keep going on to that next level and next level and next level.
That's exactly it. And I think that what's beautiful about that framing is the people who don't believe today are not going to be non-believers forever.
Yeah.
They just need some more data or some more proof points. And that's why friends and family are believers, because they've known you for a decade or maybe all of your life. And so they are comfortable taking a bet on you and maybe the space you're working in, without seeing the traction or the track record of what you've actually done with this particular company.
Right.
Whereas another seed investor might need to see 6 months or a year of traction to then be a believer. And in almost every round group, we've had somebody come in and invest who had previously turned us down. Right?
Yeah.
And so once you tell yourself, you're just not there yet, and there's nothing that I can do by way of words and pitching to change your mind today, that's fine. Let me just go back and do some more work and bring you. But in the meanwhile, let me go collect the believers and their capital so I can get those proof points on the table.
Yeah. So building up that tribe.
Absolutely.
Building the village, I guess, in some respects.
Exactly.
That's fantastic. So, is there a difference between how you would approach it for a series? I mean, we were very fortunate, and thank you for allowing us to be part of your Series B round. But is there a difference between approaching a Series A round investor and a Series B round investor? Yeah,
that's a good question. And thank you for being part of the Series B and leading it and being such a great partner.
Yeah.
So I'd say yes, there are. Every stage is different. I think the biggest difference that I found was between seed capital versus institutional capital. When we go talk to angel investors versus institutional, some more seed versus Series A for us.
Right.
When you're talking to an angel investor, a professional angel investor will typically write between 10 and 25 checks a year.
Yeah.
And so you're trying to convince them that you should be one of those, call it 20 checks they'll write in a year, which is not easy to do, but it's in some ways a lower bar. It's a completely different exercise when you're raising institutional capital, because a partner at a VC firm will typically do 1 to 2 investments a year.
Yeah. True.
And that means over a course of 5 or 7 years, which will be the period over which their career is going to be made, they will do, let's call it 10 deals.
Yeah.
And so you're trying to convince them that you ought to be one of those 10 deals that will make or break their career, which is a completely different conversation. And so really understanding, again, like, we talk about understanding our users all the time as a startup. When you're fundraising, understanding the person that you're selling to, which is the investor, and their motivations and what they need to believe, really understanding that really helps. And so that makes institutional fundraising very different from seed fundraising. And the process is different. I can talk more about that if it's helpful. And then to your question of Series A versus Series B, that core thing of you're still trying to convince an institutional investor that should be one of their 10 deals, that still remains. The difference is that at Series B, you have to lead with traction and metrics. Series A, you can still lead with story and vision, and you can back it up with some data. And at the Series B, I would say it's flipped. You lead with the metrics, and then round it out with the story.
But the common element here throughout this whole discussion so far has always been about that human connection, be it through your clients, be it through your mentors, and even your investors. It comes down to sharing the vision and being part of that journey through A, B, or actually maybe the C's and the D's moving forward as well.
I'm glad to hear it. I'll make one quick comment on this. I'm smiling because I wasn't planning for this to come through, but one of the values we hold very dearly at Springboard is embracing humanness. And the way we think about that is just knowing that everybody you talk to, whether it's an individual or a student or a partner or a customer or an investor, at the end of the day, it's a human being with really rich stories and dreams and aspirations. The better you understand them, the better it is for business. Not just because it feels good, but it's actually good business.
Yeah, no, I agree. I think the human touch is, we all talk about it, but we're so lucky to be sharing this journey with you because we're actually seeing it across all sorts of different facets of the business too. I'm going to just final questions, if I may. Absolutely. So, what's next? Where's the vision? Where's the dream? I mean, I think India's a massive market. The US is large as well. Where's next?
Yeah, we put in place a goal for ourselves at the start of 2020. This is pre-pandemic. Little did we know how much things will change. Where we said we want to transform 1 million lives by 2030, which is to put 1 million people into jobs they love. And in order to do that, we're going to have to out-innovate ourselves. And that means today we focus on technology skills in primarily in the US and direct to consumer. But if you think about a broader mission, which is to bridge the world's skills gap, the skills gap applies across industries. It applies well beyond tech. There's a skills gap in sales. There's a massive skills gap in healthcare. Mm-hmm. The skills gap is geographically agnostic. The skills gap is felt, the pinch of the skills gap is actually felt most by businesses.
Yes.
Because ultimately they pay for it. And universities are also trying to figure out how can they get in the game, because a lot of universities have really great intent, but they're not always up to date and current on these digital job relevant skills and how do they get people all the way to the job outcome. And so really we're taking a pretty broad view of these things, and as we look at the coming years, we're looking at partnering with universities to help them bring programs to market that are relevant and career focused. And we are looking to work directly with businesses and enterprise to say,
fantastic.
Yeah.
Fantastic. You know what? This has been great because I think, to be honest, I think you're transforming more than just 1 million lives, because I think you're excluding all the mentors that are part of that journey. I think, right? So I think it's actually humbling just to kind of hear that vision. And the one thing that really excites me about this is, yes, we're a tech fund, but we're not we haven't invested in, we haven't talked about AI or technology that drives it. It's always been about that core. That's what's driving it, but it's all that core human connection. And for that, I thank you. I think it's been a pleasure having this discussion with you, Gautam.
Thank you for saying that. And yeah, I think AI is going to augment humanity. It shouldn't replace humanity, and that's how we think of the role of AI. And I'm glad you picked up on that. But it's been a pleasure having this conversation. Go.
Once again, thank you so much for your time, and I'm looking forward to having another chat with you, hopefully in another few months, just to kind of see how things are running and how we can also help support and drive your business.
Sounds fantastic. Likewise.
Great. All right, Tan. And for everyone else, thank you so much for listening in. And if you have friends who would love to sort of hear about the human experience and the human interaction and how to sort of build a business based on what drives this world, which is humanity, please follow, share, and look forward to talking to you at the next one. Cheers. Bye.